All right, Ida, I think we are live.
Hi, Jerry. How's it going?
How's it going, Ida?
Pretty good. Yourself?
Not too bad, not too bad. So, let's welcome everybody to another UFile live session. This time, relate. So, what's the topic actually today, Ida? What are we going to talk about today?
We're going to be talking about business expenses. So, you're going to start off by explaining to us, because a lot of people use the term interchangeably if they're self employed. They say, oh, I have business expenses, but yet they're not sure whether to file a T1 or a T2. So, um, do you want to
Okay,
start off at
so I'm having a
explaining?
bit of technical difficulties on my end. Yeah, unfortunately, I'm having a bit of technical difficulties, Ida. Sorry.
Okay. Can you still hear me, Jerry? Sorry about that, people. I think we are having a little bit of technical difficulties.
Okay, I think we're back now. Sorry, buddy, I was having problems on my end. Okay, so hold on about that. Sorry, everybody. So that was on my end. Unfortunately, I'm having a bit of problems with my connection here. I apologize, everybody. So I don't know if everybody could see me now and they could hear me now. Ida, can you hear me?
I can hear you.
Okay, perfect. So we're live then. Then we're fine. We're fine then. Okay, so go ahead, Ida. Sorry, I branched off for a second there and it didn't work out. So sorry about that. So
Okay,
on my
let,
end,
let's
technical
uh,
difficulties.
let's
Let's
start
start
over.
again. All right, go ahead.
Okay, business expenses. A lot of people use the term interchangeably. They may be self-employed, but they do have a small business. How do they know whether they need to file a T1 or a T2, and what's the difference? And then we'll talk about the different expenses we can take.
Okay, so I said so. Long story short, you have to figure out whether you're an incorporated business or whether you are self-employed. Okay, that's essentially what you need to figure out first and foremost. Now, A self-employed individual is simply somebody who just seeks out contracts and collects money essentially for those contracts. Okay, that's essentially how that works. Okay, somebody who's incorporated is a little bit different because they've created a new entity. They've created what in legal terms we call a moral person. Okay, so this is a completely distinct entity from you, the person, and you essentially become a shareholder of that corporation. So you have a layer there between yourself and the corporation. Okay, so it's completely distinct. It's completely separate one from the other. While somebody who's self-employed does not register a different person or a different entity. They simply go out there and they produce business income. Okay, they simply seek out contracts for whatever service or product that they're selling to the public. Okay, that's essentially the main distinction between them. Now, somebody who is self-employed produces a T1 return or a personal return, just like anybody else who is simply an employee. The difference is that they have to produce an additional form. And the additional form is what we call the T2125. That's on the federal side. For those of you who are in Quebec, you also have to produce an additional form, which is the TP80. Okay, so it's an additional form for those of you who are in Quebec. So that's essentially the distinction between the two.
Good. But everybody, whether you're self-employed or not, you do have to file a T1.
Yes, no matter what, whether you're self-employed or whether you're an employee, you're producing a T1. The only distinction is that additional form that somebody who's self-employed has to produce in order to declare their business income. So essentially what they're doing is declaring, their financial statement, essentially. Their income statement is what they're declaring on the T2125. Now, for those of you who are incorporated, there is a separate return if you're a shareholder of an incorporated business. And that's what's called the T2 corporate return, which we also support as well. Okay, so we have a product called UFile T2, which is an online product that you can use, that you can produce a basic corporate return if you have an incorporated business.
Okay. Thanks, Jerry. So now, actually, we have a question from
Mhm.
Gustavo. Hi, Gustavo. Okay, he's self-employed and he wants to know what are the home-based business expenses he can claim.
Okay, so first things first, what you need to determine is you need to determine the space that is dedicated to your business within your home. Okay, so that's the first thing you need to do. So, what is the percentage of the total area of the home that home office represents? That's really really important to figure out. Okay, and the reason being that whatever expenses I'm going to name now that are eligible home-based expenses, okay, you can only claim these on a prorated basis based on the percentage that home office represents. So, example, if your home office represents 10% of your home, then you're only allowed to deduct 10% of those expenses, of the value of those expenses. So let me go ahead on the form directly. Let me have a look at what we can claim as far as home office expenses. So I'm just going directly to the T2125, which I mentioned earlier in this case. And we will go straight there, and I will tell you now which expenses are eligible for home office expenses. Just give me just 1 second, and I will get there to that portion of the form. I apologize for the delay. So just, roundabout in general, what we're talking about is any maintenance expenses that are related to the home. So heating, electricity, for example, property taxes if you own the home, mortgage interest if you own the home, or your rent if you're renting your home. But again, all these types of expenses, okay, they can only be claimed on a prorated basis. And remember that you cannot create a business loss on your home office expenses. So if, let's say, for example, your home office expenses are more than the income that you gained on your business, your home office expenses will be capped to the income. And any excess expenses that you have, you will carry forward to the following year.
Okay. Fola, you had asked if for the math for the base home deductions, can you let me know if Jerry has completely answered the question? As he said, it's prorated. If it's one room out of five, so it's 1/5, right?
Yeah. So essentially, what you do is you take, if you want the technical calculation of what you need to do, essentially what it is you take the total area of your home. Okay, so whatever that, so whatever the square footage of your home is, and then you take the square footage that represents your home office. And now take the square footage of your home office divided by the square footage total of your home, you get a percentage. And that's the percentage that you are allowed to claim as far as the dollar value of the expenses that I just mentioned.
Okay. Next question from Mr. Islam. If a person has multiple businesses, are those businesses all related or connected? What forms and how I need to fill out the T2 when doing a corporate tax?
Okay. The answer is yes. Okay. If you're doing a corporate return, you are related and very likely associated. So you're definitely related. Okay. You're definitely what's considered a related corporation. Okay. Because you essentially have the same shareholders that are between these corporations. Now, you are also very likely associated if you are in control, or you or somebody related to you control these corporations as well. And we're talking about, a percentage as a shareholder. Okay. The percentage of the shares of these corporations. The moment you are associated and related, there are two specific forms that you need to produce. Okay, if you're related, you need to produce what's called Schedule 9. Okay, on your T2 return. If you're associated, you also have to produce Schedule 23. And Schedule 23, why that's important is because between the associated corporations, you need to split the limit of what's called the small business deduction. Okay, now just to make this as simple as possible, because now I'm getting very taxinese in this case. I'm going to legalese as well. Associated corporations, remember that corporations are entitled to a lower tax rate. Okay, usually on your first $500,000 of income, which is what's called the business limit. Okay, your tax rate can be as low as 9%. Okay, for what's called for Canadian controlled private corporations. In order, though, to get to the 9%, that is basically you get to 9% by being eligible for the small business deduction. And that is on your first $500,000 of income. Now, should you have associated corporations amongst you, that $500,000 limit has to be split amongst the associated corporations. Okay, it has to be split amongst them. So because of that, you have to indicate on Schedule 23 how much of that $500,000 limit you are allocating to each corporation. So those are the schedules that you need to produce, okay? And so Schedule 9 for related corporation and Schedule 23 for associated corporation.
Okay, next question from Cindy. My mom passed away this year. It says I can't net file to do her taxes. Is that a fact? Also, this would not be her last taxes, right? Sorry for your loss, Cindy, but I'll
Yeah.
let Jerry answer the
So,
questions
so
right
my condolences as well, Cindy, for your loss. So essentially, yes. So the issue is that you have a date of death of 2020 declared on the return for 2019, which means it is not your mother that is filing the return. Okay, the government knows this. Okay, and because of that, they won't let you net file the return. So yes, this would have to be a paper file. You have to mail it in, and you have to mail it in with a copy of the death certificate of your mother, so that the government knows that it's not in actuality your mom that is filing the return, but it's you who is the inheritor of the estate that is filing the return. Okay, they want to make sure that it's the right person that's doing this. So you would have to file your return paper file. There's no choice there. And you're absolutely right. It would not be the final return. Next year is the final return. And that's when you're going to declare as a final return. But because you've declared the 2020 date of death, that renders it ineligible for net file for 2019 automatically.
Okay. Dilip has a question for us. If someone is living with parents and is not on the title, can any home expenses be claimed?
It becomes tricky at that point, to be honest with you. Yeah, because remember, if you're not on the deed, how does the government know that you're paying for those expenses? Right? Because that's really going to be the test for the government. Is that okay? Let's say for example, I'm living with my parents and I've got a home-based business. Okay, if my parents are on the mortgage and my parents are on the property taxes, well, to the government, it's my parents that are paying for these eligible expenses and not me. What's my proof that I've paid for those expenses? right? So that's your issue. Okay, now maybe you're splitting those expenses with I think it's parents, right? In this case, Ida,
Yes,
it's
yes.
parents. So maybe you are splitting those expenses. I did that at the time when I was living with my parents. Okay, but again, there's no paper trail for the government to know that you are paying for those things. Okay, so unfortunately, the answer is going to be no. Those home office expenses would not be deductible for the government because there is no proof that you are the one that is actually paying those expenses.
Okay, a question from Fola.
Mhm.
Since I can use my property taxes on my personal tax return income side, am I eligible to claim it as a business expense also? Wouldn't that be double dipping?
It would be. It would be, yes. So what you would need to do in that case, okay, Fulla, I'm just going to assume that you're just a province off the top of my head that I know you could claim property taxes in Ontario. Okay, I know that in that province you can. It's the Trillium Benefit as it's called. Okay, what you would need to do is for the Trillium Benefit, you would exclude the percentage that I mentioned before of your eligible expenses for your home-based business. So, for example, let's say you decided that 10% of your home is home-based, is your home office. Then, when you're going to claim the Trillium Benefit, for example, you're only going to claim 90% of that amount for the other credit or benefit. Okay, so that way you're not double dipping at that point because you're only claiming 90% for the standard credit and 10% for your home office. So that's essentially how you would do it. You would have to split the two.
Thanks, Jerry. Mr. Islam, you have a question? I just don't understand the first sentence. Your friend's brother did not file a 2019 tax return. Should I file for the 2019 as of December 31st? He was alive. Should I do a normal tax return as if he was living? So,
Uh,
sorry, I believe you're talking about him passing away last week.
Yeah, so it's the same answer as I gave to I believe it was Cindy in this case. It's exactly the same answer. You have to declare the date of death even if it's in the following year. That has to be done because remember that the government wants to know who's filing the return. If you're using UFile, the government is assuming it's the person themselves that is filing the return. Okay, and they know where it's coming from. We have to put in a code in the software to know that it's from UFile, so they know it's a consumer product. Okay, so in this case, no, you have to paper file with a certificate of death to indicate who are the inheritors of the and a copy of the will as well. Actually, I would recommend to add as well, so the government knows who the inheritor is, and that way you could submit and you're legal with the government. Okay, so unfortunately, no, you could if you want to. I mean, listen, you could simply not mention anything and transmit. The government will accept it, but next year you will have a problem. Okay, you will have a problem with the government next year because they're going to say, well, what happened? You're declaring that the person died then when they filed and that was before they filed the return. So something's not normal there.
Hmm. However, if he had filed like a month ago, then this situation would not occur.
Then no, you would be fine. Yeah, exactly. But the moment you are filing and the person's deceased as of the date you are filing, you have to declare that date. That date.
Okay.
I think we missed one, Ida. Hold
Oh,
on.
did we?
Yeah, there's one where it says any income taxes. You see Gary Hargrove, I think.
Yeah, that's the next
I
one.
think. Oh, that's the next one. Okay, sorry. Okay, I apologize.
Are
I
you
apologize.
trying to spy on me?
I'm yeah, no, I'm really terrible at this. So you know what? I'm going to leave you to
You're
it.
very eager to answer questions. I get it.
Yes,
Okay,
I
hi
am.
Gary.
Yes.
His question: Are income taxes paid from a business account considered as self-employed income?
Income tax. Okay, are income taxes paid from a business account considered as self-employed income? I'm not sure how you would be paying those income taxes from a business account. I'm not quite sure on that question, to be honest with you, Gary. Can you elaborate a little bit on that one? Because I'm not sure what that means. Okay, income taxes based from a business account considered self-employment income.
Could he
Uh,
mean a bank account?
Maybe, yeah. I mean, either way, yourself again, whether you to determine whether you're self-employed or not. Essentially, what it means is, did you incorporate or not? If you're making business income and you're not incorporated, you're self-employed. That's essentially the rule of thumb. If you're incorporated, and it's the corporate and the money's being made from the corporation's name, then the income belongs in the corporate account in the corporation, and then it's a T2 return you have to produce and not a T1 at that point.
Okay, I'll just check if he hasn't added anything yet. Okay, we'll go on to the next question.
Yeah.
Uh, Asma? For an Uber driver, where can cash tips be declared?
Business income. You add them to your gross income. It's simple as that. If you're self-employed, you are self-employed, period. Okay. It's not, you can't put it as employment income because this is part of your business. So if you are declaring your Uber income as self-employed, your tips get added to your gross income. It's as simple as that.
Okay. Fola has another question for us.
Yeah.
Property tax question. Oh, you're welcome. Does UFile have the option to claim 90% of the Trillium side?
No, you don't. You don't. What you do is you declare 90% of the property tax. In other words, you're going to prorate the amount you're declaring for the Trillium benefit. That's what you need to do. Okay. On the so there's no the program will not apply a proration on the Trillium benefit. You have to prorate the amount that you're claiming. Okay. On the business side, though, for home office expenses, the program will prorate on the 10%. That it will do. Okay, so you declare the full expense, you indicate the percentage of the home that you're using for personal purposes, and the program will prorate the business expense for your home office. For the Trillium benefit, you have to prorate it yourself. So you're going to declare 90% of that amount for the Trillium benefit. That's how you would do it.
Okay. Next question, Asma. What does the adjusted cost base of the vehicle include? Does it include taxes paid on the purchase price? Does it include license fees?
Yes, all of the above. Everything you mentioned there. Anything that you paid out of pocket to purchase that car, not including maintenance. So, for example, if let's say they charged putting in the wheels, or like winter tires because you bought it in the winter and stuff, that doesn't count. But anything else you paid, okay, even for example rust proofing, if let's say you paid extra for the rust proofing, that's part of the adjusted cost base of the vehicle. So yes, you have to include anything that you paid for the purchase of the vehicle gets added in there. Absolutely.
Okay, so why don't you talk a little bit about the expenses for a vehicle?
Okay, so the expenses for vehicles essentially, you have two types. So first of all, the first question that comes in is, do you own the vehicle or did you lease the vehicle? That's really the first question that comes in, right? So if you lease the vehicle, then you're entitled to claim your monthly fee that you paid for your leased vehicle up to a certain, what the government calls, reasonable limit. Okay, and the program will compute this automatically as long as you indicate what the sticker price of the vehicle is. The program will make the computation for you within the software. Okay, from there, you're allowed, of course, other expenses, for the maintenance of the vehicle, so fuel, license and registration. Another one is repairs and maintenance, and so on. Okay, so all these type of expenses are eligible as vehicle expenses for your vehicle. Okay, now, the expenses that I just mentioned now, which is fuel, maintenance, license, registration, etc., these are applicable whether you own the vehicle or whether you lease the vehicle. Okay, like I said, with lease, you can add now your monthly fee. Now, if you own the vehicle, you cannot deduct your monthly fee that you pay for financing that vehicle. What you are allowed is what's called depreciation. And depreciation is simply put, it is a prescribed percentage that the government assigns for the vehicle, okay, that you are allowed to deduct as a loss of value of your vehicle. Okay, that's essentially what you're allowed. And the prescribed rate is 30% per year on a declining balance on the value of the vehicle, and you're capped at 30,000 plus GST and QST for the value. Sorry, not GST, but PST, provincial sales tax, on the value of the vehicle. So, for example, if you decide to buy a Lexus and you say, "Hey, I'm going to deduct," I could claim depreciation on a $60,000-$70,000 Lexus. Well, guess what? You're only allowed to deduct the value of an equivalent Toyota. That's essentially all you're going to be allowed to do, which is 30,000 plus applicable sales taxes. So that's what you're allowed as vehicle expenses. Now, from there, you also have to have a logbook, and that is important. Okay, the government will require you to keep a logbook. In the first year, they want a logbook for the entire year. After the first year, you have to have at least one quarterly logbook. Now, the reason for this is because if you're using your personal vehicle for your business, of course, not all the kilometers that you're using that vehicle for will be for your business. You're also using it for your own personal needs. So because of that, all the expenses that I just mentioned before have to be prorated based on the percentage use of your vehicle, on the business percentage use of your vehicle. Okay. And this, of course, you will determine based on your logbook with your kilometers. And remember that this logbook can be very simple now. You have apps, you have GPS apps that will track where you're going now. Okay. You just simply flick the switch and you tell the app, that you're using it for business purposes. Okay. So it's very, very simply done. So go ahead and use those apps to track your kilometers.
Thank you, Jerry. Question from Dilip. She says she was not aware that property taxes can be claimed on personal income tax. Under what
Yeah.
expense head and any utilities or other expenses are eligible also?
It depends. Again, remember that property tax, in this case, the example that I'm giving is you could only use it if you have a home-based office, okay? If you have a home-based business, okay? That's the only time you could actually use your property tax as a deductible expense, okay? Now, for in other scenarios where you can claim property taxes, there's only a few. One of them being rental income. So, for example, if you are renting a portion or an entire building, then your property taxes become deductible again. Okay. And remember, this is just the overarching rule. Overarching rule for deductible expenses, whether it's business or whether it's a rental income. The question is that expense incurred for the purposes of making income? If the answer is yes, then the expense is deductible. Okay, that's the overarching rule in the Income Tax Act. Okay, that's essentially the general rule. Now, there are certain provinces where you can claim a credit based on your property taxes. One example is Ontario with a Trillium Benefit. Now, I don't remember all the provinces off the top of my head, but I remember Ontario. Okay, so you would have to check in this case within your provincial guides on the CRA website. You can check your provincial guide and see whether you can claim the credits for your property taxes. But it's not every province that allows this. Only certain provinces allow this.
And the forms, if they're eligible, the forms will be found under your province's credits, right?
Exactly. Yeah. In UFile, when you're going to have the section for provincial credits, you're going to find the credit in there if it's applicable. Again, it depends. It depends on your province. Okay. Like I said, Ontario has it. Quebec has one, but Quebec, you don't have to actually put in your property taxes, your property tax amount. You only have to put in your property tax bill number. Okay, that's all you need in order to claim that equivalent credit in Quebec. Okay, but in Ontario, you do have to enter the actual amount that you paid.
Okay, thanks, Jerry. That's very good to know. Okay, Mr. Islam, again, my friend incorporated last year. He spent a substantial amount in the construction.
Okay.
However, he forgot to register the GST account with the CRA. In January, when he started the operation, he opened the GST account. Can he claim the GST he paid last year?
That's a good question. That's not even income tax, to be honest with you. That's purely sales tax. That question. I'm going to be honest with you. I'm not as well versed in sales taxes as I am in income taxes. In this case, you know what? My instinct would be no. I don't believe you'd be able to claim the previous year because you were not withholding at source any GST at that point. So I don't believe, because remember that it's when you're doing the GST forms, you have to indicate what GST you paid out and what GST you were paying on your expenses. Now, your expenses are deductible with the GST. They are deductible, those expenses, because that's what you actually paid. Now, can you claim it as an input tax credit? That I'm not sure. I'm going to be honest with you. Your best bet is to call the CRA directly and find out that question if you weren't registered. My instinct would be no. But again, I'm not as well versed in sales taxes, so you would have to check with them.
He has also another question for us.
Yeah.
Can an Uber driver claim a portion of the property tax, utilities, and mortgage interest as an eligible expense?
I will answer that question with, where does he work? I would be very surprised if that person has a home office. I'd be very, very surprised if they're using that. Now, in theory, they can. In theory, if they're managing their business, their Uber business from their home, from their workstation, then chances are they can. But remember that Uber basically handles most of that. So I would be very surprised if the government would allow that. In theory, yes, but I would say no. My instinct would be no in this case because again, Uber takes care of most of that kind of paperwork. So I would say no in that case. It would be very hard to make the argument that you've got a home office when you're an Uber driver. it would be very, very difficult to make that kind of argument with the CRA.
Okay. Another question from Dilip. Also, when one declares rental income as business income or personal income on personal income tax, can any primary residence expenses be claimed?
No, the answer is no. Well, remember, you're prorating, right? So when one declares rental income as a business income, okay, on a personal income tax return, can any primary residence expenses be claimed? Well, remember, if you've got remember, rental income is not considered business income. Let's get one thing straight, okay? In the Income Tax Act, you're considered as property income, not business income, okay? It's two distinct things, okay? So if you've got a rental income, in this case, okay, I'm assuming you're talking about rental income in general, okay? You cannot claim the personal portion of your home. There's a proration again, and when you're entering in a UFile and on the government form, which is the T776, you have to declare to the government what portion of your home is your personal home, and then of course every expense at that point gets prorated based on that percentage. So no, you're not allowed to claim anything on the personal portion of your home when it comes to a rental property. When it comes to rental income, you're not allowed.
Okay, next question from Cal Sutherland. Are RASP credit worth anything? I.e., I owe for home equity withdrawal. Can the amount be deducted from the credit?
Home equity withdrawal. Okay, I'm assuming you have a HELOC. I'm assuming. I don't know if Cal, you can confirm that. Home equity line of credit is what I'm assuming. In that case, when you're saying home equity withdrawal, so I'm assuming home equity line of credit. The question is, what are you using that HELOC for? That's really the question. Again, you have to think of it this way. So when you pulled out that HELOC, what did you use the income for? Okay, if you used it, for example, to invest in a non-registered account. Okay, so for example, I buy dividend-paying stock in a non-registered account, so it's not a TFSA or an RSP. Then the interest becomes deductible. You're allowed to claim it as an interest expense on your tax return. If you pulled out the HELOC to invest in your business, okay, if you put it in your business, then again, the interest becomes deductible because you are using it to produce income. That's the overarching rule. But if you pulled it out for any other reason other than making taxable income, then at that point it is not deductible. Your interest is not deductible at all.
Okay, we have another question from Asma. If you own the car and you want to claim the depreciation percentage for the first year, is it 30% or 15%?
Okay, the answer will actually be good news. It'll be neither. Actually, and I'll explain in a minute. I know, Asma, you're gonna look at me saying, "What is this guy talking about?" Well, I'll explain why. Yes, you're right. The standard rate for a vehicle is 30%, and of course, in the first year, you're subject to the half-year rule. Okay, which means it would be 15% would be your applicable rule. But remember that since the 20th of November 2018, the government has introduced what they call the Accelerated Investment Incentive, which is the AII in short. Okay, and what that does is that if the vehicle was put into service after the 20th of November 2018, then that 15% rate gets tripled. And you're allowed now 45% depreciation rate instead of 15. Okay, and that's as of November 20th, 2018. So that was announced it was the fiscal update in November. Okay, so that's great news, because you can literally triple that rate, that 15% normal rate. And that's, by the way, that's not just for vehicles. That's any depreciable property that was put into service, in other words, bought and put into service after the 20th of November 2018. Any depreciable property that you're using for your business, you are now allowed to triple the first year depreciation rate.
Good. Fate. For Ontario Trillium, for eligibility, I left it to UFile's decision. The system made the person to claim, but later there was a letter from the CRA to refund with a fine. Why did this happen?
Okay, Fate, we need the file. Okay, it's kind of hard to pronounce ourselves without getting the file. Okay, so your best bet is to contact our support staff. Okay, contact us, Ida. If you could just give them the email address, for
Okay, for
contact
the
us.
online, I'll write it to you, but I'll just say it for anybody else who's listening. It's help@ufile.ca. You're going to get an automatic email. Please respond to that email. All right.
Yeah, that's the only way because there's a lot of factors, Faith, that can get involved. I'm not trying to duck the question. It's just that there's a lot of factors that are involved. It's very hard to determine what happened to your file without getting your file. Now, if it's UFile's mistake, if we made a calculation error, then we will refund you the UFile fee and any interest or penalties that were charged. Okay, so we will refund you on that if it was a mistake by UFile. Okay, so simply contact us through the email that Ida just mentioned.
Okay, Gustavo, if you had a licensed basement rental suite, single family property, what if any can you claim as expenses? And also, if you had a home office used to manage the rental of the suite on my part of the home, could you claim that as an expense?
Okay, so the answer is well, the expenses are basically not that different than business expenses. I mean, essentially, remember, anything that you spent in order to maintain that rental portion is deductible. But of course, you have a personal portion as well. So any expenses on the home, you're only allowed the percentage that the rental portion represents. Okay, so I mean, some standard fees. Let me just go straight to the form itself, which is the T776. Let's go in there. So on the T776, what you would be allowed to claim, so advertising, insurance, interest, mortgage interest, what's called, professional fees. If you, for example, somebody prepared the return for you, repairs and maintenance, property taxes, utilities, etc. All these type of expenses are eligible, but again, on a prorated basis, based on the percentage of the home that rental portion represents. You're only allowed that percentage. Okay. Now, as far as your home office, I mean, if that portion of your home is dedicated to essentially managing the building, then yes, that becomes a rental expense. You could plug it in, for example, in office expenses. However, you would have to compute it yourself. Okay, the program, I don't believe UFile would have any section for home office expenses for that rental portion. Okay, so you would have to actually compute it yourself and simply plug it in as office expenses at that point.
Okay, we have a question from Mr. Islam. It's a two-part question. Okay, what is your tax advice on the CERB that we are receiving? Should
Yeah.
we keep a portion of it for next year's taxes to pay next year's
So
taxes?
So if you go to our UFile page on Facebook, okay, where you guys are at right now, you're going to see a bunch of TV and radio interviews that I've given just below this posting, which I literally implore all of you to, yes, put a portion of the income on the side. And there's a reason for this. And the reason is that right now, whoever is collecting the CERB is collecting the gross amount without any withholdings at source. Remember that your tax return is a reconciliation statement. Okay, what you're reconciling is if during the year you pay too much tax or you pay too little tax. And most employees, they'll pay their tax along the way, okay, based on their withholdings. So if right now you are making a salary, you're not getting your gross income. Your employer is withholding a portion and paying it as income tax. And then when you file your return, you determine at that point whether you pay too much or too little during the year. Here's the problem now with the CERB. You automatically have paid too little tax during the year. Why? Because you paid zero income tax while you were receiving the CERB, which means when you're going to file your return next year, it'll be income with no withholdings. So you will have to pay lump sum the income tax on your tax return next year. So yes, I implore everybody who's listening to this, and you can listen to my interviews, my TV and radio interviews that are posted on the UFile, on the UFile.ca Facebook page. Park some on the side, at the very least 10%. That way you don't get that sticker shock, okay, when next year when you file your return.
His next questions is, I used UFile to do a T1 adjustment for my friend for 2018. However, when he logged in to check his last year NOA, there is no adjustment made.
Yeah, and that's normal because adjustments take a long time. If you are to paper file adjustments to the CRA, they take a long time for them to process. Okay. And remember that when you're transmitting, if you net file the return, it doesn't go with net file. Okay. A T1 adjustment form can only be paper filed, but it doesn't surprise me at all. I mean, adjustments are notoriously slow. My recommendation to you next time for an adjustment you might do later on is to simply go to the My Account site of the person and do the adjustment directly online. That's your best bet. If you want that adjustment to be processed quickly, go online directly and do it directly. Now, if you have an account, if you're a representative of that client, you go to your represent a client portal. If not, have your client go directly into their My Account portal with the CRA and do the adjustment directly online.
Okay. Are you okay there, Jerry?
Yeah. It's a mouthful right now.
Keep hydrated.
I'm trying.
Okay.
It's kind of warm in this room right now, so go ahead.
Okay, next question from Asma. My friend got Ontario Social Assistance in 2018, and she
Yeah.
included that money in her 2018 tax return.
Yeah.
In 2019, she was told she was overpaid, and she returned the overpaid money. Can she claim this money on her 2019 tax? If yes, where?
Yeah, the answer is yes. Although it's not even, remember that social assistance is not taxable, right, at the base. So it doesn't really matter. It won't affect really much on her return. The answer is yes, you can. I'm just going now into UFile. I'm just going to double check 1 second to see where you would input that. Just give me 1 second. I'm just going in there now, and I will tell you roughly where to go. So let me just find it myself. So I'm going to go to the interview setup, and I should be able to find some sort of section. It should probably be in other deductions. It should be in other deductions and credits. So I'm just going to go there. And yeah, I would simply put it in other deductions. The section is already preloaded by the software, so you would have other deductions and credits. Just click over there, and you would simply put in the amount that was repaid in there. That's what I would do. Just choose other deductions. Although, like I said, it really doesn't affect much on the return because social assistance is not taxable anyways. So it won't have much of an effect on the return.
Okay. Fola has a question for us.
Mm-hmm.
If a self-employment partnership income started in the middle of the year, how do I allow UFile to prorate it? Every time I file for self-employment that started in the middle of the year and I click the option that says started in the middle of the year, I get an error message. Any advice?
You shouldn't be getting any error messages. I mean, what you do is you basically put the different start date is what you would do. So the program asks you for a start date and an end date, okay, for your year end. So you just put whatever actual start date it was. Okay, that's all you would need to do. Okay, and then at that point, although I think I just figured out why you have that error. Let me just go into business income 1 second, and we'll go from there. So your beginning of fiscal period would be whatever the real date is, not 01/01/2019. Your fiscal year end would be 31st December 2019. That's what it would be. And then from there, I'm trying to figure out.
Isn't there a line that asks if it's your first year of operation?
Yeah, that's well, it's a tick mark usually. Let me just go in there. Is this the first year of operation? The final year was and I would just tick the box. Tick the box if it's the first year of operations. That's all you would need to do, and the rest should be handled by the software. You should not have any error message. If you continue to have it, then contact our support staff, and they'll guide you to the right area.
Okay, Mr. Islam wants to know if the CEWS is taxable.
Yes, for the business, yes, it would be. So you're talking about the wage subsidy in this case that businesses or corporations would be entitled to? The answer is yes, it would be taxable. So it's either you're going to reduce your employment expense by the amount of the subsidy that you're getting, or you're simply going to lump it into your gross income. Either one, okay? Either one is what you would have to do, okay? So it's one or the other. Usually you would simply reduce your employment expense by the amount of the grant that you got, or if you want to make it more simple, just added to your tax to your gross business income, whether it's a corporation or whether it's a self-employed business. It's the same thing. Yeah, it is taxable.
Okay. We have a question from Jonathan. How far, how many years allowed by CRA do we go back to have an adjustment or on income taxes from previous years filed?
10 years. That's the rule of thumb. Okay. So you were allowed to adjust 10 years back from the current taxation year. So right now you could go back till 2009 to adjust any tax return. That's what you're allowed to do.
Okay, next question from again Mr. Islam. For the CEWS eligibility, it says although the employer's revenue has not met 30% reduction for period 2 because they
Yeah.
qualified for period 1,
Yeah.
they
Yeah.
automatically qualified.
Yeah.
That means we don't need to verify the period 2 revenue reduction criteria.
It's by if memory serves me on the CEWS, it's a period by period basis. You have to redo the application every period. So if you don't meet the criteria within that period, then you won't get it. That's at least my understanding of the CEWS. I'm just gonna double check that. Just give me 1 second here. Let me just go to our website here 1 second. I know on our professional site we had something there on that, so I'm just going to double check. So, but I believe you have to redo the application every period. So if you don't meet it, then you wouldn't have it. But let me just check. Okay, so if I go here. So the CWS, so I click here. Just give me guys 1 second. I'm just going to double check. Yeah, because what I have here is that the criteria 30% drop of revenue will be measured through a specific eligibility periods. So again, to me, you have to reapply. That's my understanding. So if you don't meet it at period 2, so in period 1 you meet it because you meet the 15%, then you're fine. But in period 2, if you don't meet the 30%, then I don't believe you'd be entitled to it. That's my understanding of this application. I could be wrong. I'm just gonna confirm that with the government website, and just give you that how that works. So determine who is an eligible employer. I'm just going there now. Okay, so you must determine if you're okay. Okay, so here we go. Okay, so now here's the answer. So I was wrong. I was a little bit wrong there. So if you determine you qualify for the CEWS for one claim period, you will automatically qualify for the following claim period. Calculate your reduction by comparing your eligible revenue. So there you go. So if you meet it in period number 1, you automatically meet it for period number 2. But if you don't meet it for period, so that means you're going to get the CWS for periods 1 and 2. But if you don't meet it in period 2, then you won't get it for period 3. That's essentially how that works. Okay, so there you go. So that's the answer to that question.
Okay. Okay, we're waiting for other questions. I believe Islam Jerry replied to everything because he asked. He went and checked himself also on the CRA website. Okay.
Yeah, Jillian has the answer there. You need
exactly.
to requalify for period 3. That's exactly what I answered. Yeah,
That's
exactly.
what I said. Actually, what about deadlines? To file your return for T1, T2. What are the differences?
Yeah, so the deadline essentially is the deadline has actually changed for somebody who's self-employed. Actually, that's the news there. So for somebody who's self-employed, June 15th was always the deadline for those individuals to file the returns, whether it's themselves or their spouses. So as long as one of the two has a business, then at that point you would not be. At that point, you are eligible for the June 15th deadline date. Now, what has changed is the balance due date, right? So the balance due date was actually April 30th for businesses, even though they had till June 15th to file their return. Now it is September 1st. It's been extended to September 1st, just like every other taxpayer in Canada. Okay, so that's the that's essentially the new rules in that case.
What about a corporation? When would they have to file?
Okay, so in corporations, so if you have a T2 return, the standard deadline date is 6 months after your year end. So for example, if your year end is December 31st, you have till June 30th to file your return without any penalties. Okay, now because of what's happening with the pandemic and COVID, the government has decided to extend any corporation that had a deadline in June, July, and August to September 1st. Okay, so they decided to extend that deadline. So essentially, what it means is, like the example that I gave, if your year ends were December, January, or February, you have now till September 1st to file the return. While before, you only had 6 months from your year end date to file your tax return. So that's the new deadline there.
And they've also changed the deadline for the payments, right? If you're self-employed and you owe taxes at the end of the year.
September 1st, like I mentioned before. Yeah, that's the balance due, right? And we're talking about installment payments now. Yes. So remember that an employee, like I was mentioning before, pays their tax during the year through their withholdings at source. But somebody who's self-employed has no withholdings at source.
Mhm.
They make their gross income, period, minus, of course, whatever expenses they might have. Okay, so for those individuals, there's a concept of installment payments. And what installment payments are, okay, essentially is you are prepaying your income tax for the year based on, your tax owing of the previous year. Okay, so the government essentially what they're doing is that they're kind of rendering you like an employee. Just like an employee will pay at source their income tax throughout their withholdings, the installment payment is the same concept. The only difference is that instead of it being every 2 weeks or every week, it's every quarter of the year. So what the government has done in this case is that if your next installment payment was June 15th, well, then they're extending that installment payment to September 1st. Okay, so they're going to extend that installment as well.
Okay, but in normal circumstances, the file date for individuals is usually April 30th.
Yes.
And June 15th for self-employed.
Yes.
But if you were self-employed, you had to make your payment on April 30th anyways.
Back in the day, yeah, but in the old, which I mentioned actually, in the old deadline of the balance owing was always April 30th, but now that'll be September 1st. Okay, because of the fact that, remember, June 15th is only so that you don't pay any penalties, but under normal circumstances, you were still paying interest if you didn't pay your balance owing by April 30th. Now, I know that sounds counterintuitive, but that's what the rule is. There's nothing you can do. Okay, that's what the rule is.
Okay, Mr. Islam has another question for us. Can you please clarify if any person receiving CERB for the month of May, June, if he gets a part-time job offer and is receiving $950 per month, can he still be eligible for the CERB?
Yes, the answer is yes. That was the amendment that the government brought about. When the CRB first came on board, you had to basically have little to no income whatsoever. In other words, you were basically unemployed, you had no income, and the government would pay you CRB. Eventually, the government amended the rules, and they allow now for people who have $1,000 or below of working income to still collect the CERB. So yeah, they don't lose eligibility as long as they stay below $1,000 employment income. And there's a bunch of incomes that are eligible. I have to check what it is. I don't remember off the top of my head, but I know the standard is employment income.
Okay. Let's take a look. We're still waiting for your questions. We still have about like a good 5 to 6 minutes left. Yeah. What about people who are contractors or commission workers and they get a T4A?
Yes.
Okay, under the box of
20 or 48, right?
Yes.
So usually it's 20 or 48. The answer is it's still self-employment income, regardless. Okay, it's still self-employment income in that case. So you still have to lump it into the gross income like you would any other person who just has receipts, essentially, for income that they've collected. Okay, so there's no different. Some companies will emit a slip to their contractors just for their own documents, for their own records. Okay, so because of that, at that point, yes, it's self-employment income. That's all it is.
Fola has another question for us. Uber. Every time I file for a self-employed say Uber, do I have to include description and adjusted cost base of the vehicle? Most
Yeah.
of my clients just do the Uber for a few months, 3 months or
Yeah.
less. They bought the vehicle for personal services.
You don't have to. It's for your own records. When you transmit to the CRA, they don't see that information. Okay, they don't see. They don't even get the details, to be honest with you, of all the expenses that are incurred for the vehicle. All they get is the total expense. It's only for your records. Okay, that's so you don't have to name the car every single time. You don't have to do that. But you do have to list the expenses though. That you do have to do.
Okay, Asma asked, does this $1,000 include the taxes Uber driver collect? Asma, do you need a
Uh,
little bit more details, Jerry?
yeah. Asma, what do you mean by the $1,000 exactly? I'm not sure about that one. I'm not sure about the question.
I'll just give a few minutes for Asma to add her comments. Do you want to let everybody know if they have questions, what, all the information that's available on our website?
Yeah, sure. So, I mean, if you go to our website, which is ufile.ca, okay, you have a lot of resources that will help you in completing your tax return and also using the software. Okay. So, on our ufile.ca page at the top tab, you're going to have an option that's called that's essentially I'm just going there now. Sorry, it just takes a little second. Tips and tools. Okay, so you have two links there that are great. Actually, three of them. You have one that's called tax tips, where you can get additional information on tax topics in general. Okay, so it's a great resource. It's like a frequently asked questions essentially, and we give you some tips and tricks on your tax return. We also have a great microsite called UFile Tax and You. I can't recommend this site enough. Excuse me. And on that site, on UFile Tax and You, again, it's ufile.ca. You go to tips and tools at the top, and then you have an option called UFile Tax and You. And on that site, you have a frequently asked questions. It's essentially what I'm answering right now. You have a Q&A, a Q&A of sorts on that microsite as well. Okay, so it's a great resource to answer a lot of the questions that you might have already that you're wondering. Okay, we also have a link on that site to our podcast. We do have a podcast, believe it or not. I'm very proud of this. And Ida, we do this podcast together, and it's a great little podcast. And we talk about different tax topics, some general interest tax topics on taxation. Okay, so there's a link on the top of the Tax and You site. If not, you could go to SoundCloud, or you can go to iTunes, or you can go to Google Podcast, and you simply look up UFile, and we have a bunch of podcasts there that talk about different various subjects, general interest topics on taxation. On our website as well, on ufile.ca, we also have the UFile blog. So again, you go to tips and tools on that tab, and you're going to see an option called the UFile blog. And on that UFile blog, again, we talk about various tax topics. Okay, some general interest topics about taxation that could, really enlighten you on certain different aspects of taxation. So don't hesitate to go and visit those sites on ufile.ca.
And there's also a virtual agent. Don't forget him.
Yes. Where would we go, Ida? Where would we go for the virtual agent?
I don't have the screen in front of me.
So I believe
It's
it would be help FAQs, right? Or ask UFile. You're
Ask
right.
UFile.
So you go to the help tab at the top on ufile.ca again, and you will click on ask UFile. And we got a little, again, a virtual agent where you can simply ask a question, and UFile will try to, and our website will try to answer it directly.
Okay, now Asma came back. She's the $1,000 she's talking about is the CERB.
It's for the CERB. Okay, so
The
so
CERB
if I were
eligibility.
to go, okay, so if I'm going to go, I'm just going to look it up 1 second so I can get the answer proper. Okay, so I'm going to see what type of income is eligible. I think it is, but let me just double check. Yeah, when submitting your first claim, you cannot have earned more than $1,000 in employment and or self-employment income. So it's clear. So if you're making less than $1,000 per month on Uber, you can still claim the CERB. It's very clear on the government website. Okay, it's very, very clearly indicated.
Okay, and I think that wraps it up for the questions. Any
Okay.
other tips you want to give everybody? Anybody regarding self-employment?
For self For self-employment, I mean, offhand, I would say, keep a logbook, get organized, use an accounting app as well. I would strongly recommend in order to get organized because unfortunately, a lot of people miss out on claiming certain expenses because they simply can't find the receipts. The receipts to be able to claim those amounts. So I would recommend strongly to hold on to your receipts and use, get organized, use accounting apps in order to properly, what's called claim your expenses.
Fola has a question.
Yeah,
Can you go ahead and write it? What
yeah.
accounting? Gustavo is asking, what accounting app would you recommend?
I can't really recommend one specifically. I mean, a lot of them are pretty good directly, but I can't really recommend one specifically because it, violates certain, what's called, good commerce rules and stuff like that. So I would say, most of them are pretty good. I mean, the majority of them that are app based now, you can even snap pictures, with your receipts, and it just logs them for you. I would say go with the big guys. I mean, as much as you can. Stuff like Sage, for example, that's a good one. But again, these are, I can't really recommend one specifically, but just use one of the big ones that has good technology, that has an app essentially that you could actually use to log properly your expenses.
Okay, Fola comes up with a question here.
Yeah,
If I have a deductions more than income made in self-employment, what does that
yeah.
mean to the CRA?
Okay, what that means to the CRA is they're going to go after you. No, I'm just kidding. Just like, why did you lose money? No, I'm just
Come
kidding. But
on.
no, what it means is you have a business loss. Okay, and now remember what I mentioned before about home office expenses. You can't create the loss on home office expenses, but you can create a business loss on any other expenses that you have, including depreciation. You're actually allowed to create a loss. Now, the way it works then is that loss that you're going to claim in the year, you can use it against all of your other income in the year. Okay, so you reduce your net income essentially by that business loss. In other words, you're going to pay less tax. Okay, because you're going to have less income that you're going to get taxed on because you have a loss. Now, suppose for a second that your principal source of income is the business and that your total income comes out negative because you have that business loss. Well, if your business loss is more than any other income that you have that you're declaring on your return, then what you're doing is you're creating what the government calls a non-capital loss. And the non-capital loss can be carried forward. So you can bank it and use it in a future year up to 20 years. They don't expire. Okay. Or what you could do is you could carry it back. You carry it 3 years back is what you can do against any other income on your return. And non-capital losses are applicable against anything. Okay. It's not limited to a specific type of income. You can use it against anything.
Okay.
So I think that about covers it, right?
That
Ida? I
about
think that
covers it
covers it.
all.
All
Yes.
right. So thank
So
you everybody for attending. Thank you. Have yourselves a great day and a great summer. Ida, thank you again, as usual,
thank
for
you,
helping me
Jerry,
out
for
with
all the
this.
information.
Absolutely. So take care, everybody. Have yourselves a
Thank you
great
for
day.
listening and have a good day.
Have a good day. Bye bye.